Okay, so let's look at the agenda for today. Okay, everyone's talking about RWAs, about tokenization. It's kind of like the buzzword now in Ethereum. Hopefully, after these 10, 15 minutes, we will understand what this means. And especially, we will understand why everyone is talking about this, right? Because there's really the important part is the beauty of tokenizing. There's really something going on here that is worth looking at. Yeah, so let's start with tokenization 101 definition. What's tokenizing? It's so simple. It's the process of issuing a unique digital representation of an asset, which is a token, on the blockchain. So taking any asset from the world and creating a digital version of it and put it on the blockchain. As simple as that. So, like I mentioned in the beginning, right? This is kind of like a hot topic in the industry. Tokenization is growing so fast. Well, here we have a graph. Current market is close to 30 billion. By the way, this doesn't include stable coins because that's like a completely outlier. It's the mother of all tokenization use cases. But the importance of this slide, what I want you to capture from this is that growing adoption in the markets is never random. There must be something behind, and we will try to understand why it's growing so fast. Well, some studies say it's going to grow even farther. This is from McKinsey and Company, which has been unrelated to blockchain, and they are already saying that worst case scenario in 5 years, there's going to do a 3x in value, which is quite a lot. Best case scenario, 13x. And this is not even the most bullish analysis I have found. I mean, there's others that are talking about 100x and from reputable companies. So, first of all, we are going to see a few examples. So if someone comes to you and say tokenization, like what the fuck, right? Like you can actually share some real examples, but I will go fast on these slides because then we will stop further to see like why people are tokenizing. So the first one that I wanted to share, and I would say one of the most common ones, is short-term U.S. Treasuries, and it's quite obvious. First of all, because they are quite high in terms of yield, too high in my opinion, and because tokenizing them makes them easily accessible and cheaper to transfer and hold, and we will see it later. BlackRock is one of the biggest players here. 7.3 billion TVL. It's massive. Um, then we have other bonds. This is kind of like the same, but not U.S. Treasuries. It can be corporate bonds or other governments. What I want you to take from this slide is that the total TVL is only 0.6. It was 7.3 billion in the case of the USA, 0.6 in the case of other jurisdictions, which means this is a call to action for governments, and we are seeing already around the world, like Korean government, for example, they are stepping a lot into regulating tokenization. Why? Because if they make it legal, they can get to these levels. They can get 7 billion of buy pressure of their treasuries, which is massive for a government. This is only brought by blockchain. Private credit, another example, loans made by non-bank lenders as tokens, 15 billion. Maple Finance is killing it on this space. Commodities, probably the example that comes to mind is gold, but you can actually tokenize any precious metal on the blockchain. You may be wondering why would I tokenize it if I can actually buy digital gold already, right? In the markets, I don't need to buy the physical gold. Well, actually, it makes it much, 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 much cheaper to buy and much, much cheaper to transfer. So that's why tokenizing makes sense, and we are already over 2 billion. Last one I wanted to share is institutional funds. Why? Because this is the kind of investment vehicle that you can only access if you have several dozens of millions, right? Which I personally don't have. But tokenization enables fractionalizing that into smaller pieces so anyone can access that essentially. Hamilton Lane, Apollo, BlackRock, already over 1 billion. It's massive. We're talking about billions like it's nothing, but it's incredible. There's other examples. I could be speaking about these things forever, but stocks, private debt, like for example Samsung, they tokenize their private debt, 60 million in 2023, and it was subscribed in minutes in the Polygon blockchain. Carbon credits, real estate. You don't need to have whatever, 500,000 to buy a house. You can actually buy 1 square meter and get the rents. Tokenization enables that. Index funds and more. Okay, so now that we know some examples of tokenization, we're getting into the important part of this presentation, which is the beauty of tokenizing. Why is it growing so fast? What does tokenization enable? Well, actually, there's a lot of things that tokenization enables, so we will go one by one because it's quite important that we understand all of them. First of all, easier access. Sorry, it's fractionalized. This is what I mentioned before with the institutional funds example. Instead of or house, instead of needing to have the whatever 500,000 or 1 million that a house is worth, I can access just by buying 1% of that or even less, and I can diversify my investments. Real-time settlement, of course, traditional financial raise, it takes a lot of time, especially when it comes to international transactions. It can take like days or even weeks to settle. Well, tokenization do it real time. Cheaper issuance and access. Of course, you can just buy a token and get access to I don't know, to the rents of that house, following the same example, which of course in the traditional rails, there's a lot of paperwork to do. Why? One of the reasons because there's less intermediaries. It's cheaper and faster. Make assets productive. This is one of my favorite ones and one of the trickiest ones. And here comes DeFi. When you tokenize an asset, you put it on the blockchain and you can actually play with it, right? If I have an asset that shows that I'm the owner of 1% of one house, I can use that asset for collateral and borrow some money on a DeFi protocol. That's something you can't, well, you could do potentially, but it's kind of hard to do in the real world. So tokenization enables that, but this is one of the trickiest one, but we will come to that later. Global reach, another example, I'm from Spain, I'm not planning to buy a house in South Africa, to be honest, but with tokenization I could. Why? Because the reach is global. We are not anymore constrained about the geography. More transparent, one of the core characteristics of the blockchain. Faster process, I think I mentioned it already. Higher liquidity, tokens are super liquid. I can buy and sell in no time. Imagine buying and selling a portion of a house in the traditional rails. It could take forever. It takes forever. In the blockchain, it's so simple and less prone to human error because there's automation by smart contracts. So it's quite obvious that tokenization is kind of should take over traditional finance in some sense, but it hasn't happened yet. Why? Because there's still a few challenges that we need to address as an industry. And I will illustrate it with one very clear example. So let's look at this graph, okay? We have an example of an institutional fund. This is the kind of funds that you need to be extremely wealthy to access, okay? High TVL, 780 million via just one tokenized fund. It's tokenized in 3 blockchains, 3 public blockchains, by the way. It's Ethereum, Avalanche, and Base. So it seems, this looks like massive adoption. The question is it? The answer is no. And the reason is because the number of holders of this specific example, this is true, is 8 wallets, not 8 million, it's 8 wallets, like literally. And the reason is because mainly the first bucket here, regulatory challenges. Why is this tokenized institutional fund adopted only by 8 holders? Because you need to be certified investors in some cases, or in other cases, the token is considered a security, so you need to KYC all the users, which means at the same time that you cannot plug it into, like I said before, you cannot plug it into DeFi, you cannot make those assets productive. So everything, all of this is essentially constraining the adoption a lot, and it's a regulatory challenge that need to be addressed, but innovation goes faster than regulation. Legal realism is another challenge, and I always like to put one funny example, which is if a let's say if a token say, if an NFT say that my mother is the owner of a house in South Africa, for example, but then something happens and a judge say in real life, no, actually the owner is another person. This is a sentence saying that my mother is not the owner. The blockchain need to reflect that. And it's tricky because it seems like, okay, you can use an oracle or what, but it's actually very tricky because you need to reflect it in real time. And it's something that we, at least we still don't know how to solve. There can be upgradable contracts or standards that can reflect it in real time after a decision is made in the real world. But there's always like this problem of what happens on the real world, what happens on the blockchain. It needs to be reflected in real time. So another challenge. Blockchain UX. We all know how tricky accessing blockchain is. My parents don't use blockchain, even though I work for it, and I bet most parents don't do it. Why? Because it's wallets, private keys, whatever. It's tricky. We need to improve on that as an industry, and technical risks will always be there. Hacks, smart contract risk is about improving the technology. We don't think any of these challenges is impossible to overcome. We think they are normal challenges. We just need to work on them, but we don't think it's going to be something that, hey, tokenization will not make it. We actually are very bullish on it. So we're going to finish this presentation by doing a test. How should the perfect RWA chain look like? There's so many chains with different characteristics. So for RWA, we're going to run a test and see on different variables. We will explain each of them, and then we will go one by one and see which kind of chains survive the test. Security, by security, what I mean is like economic security, right? Like, is the chain subject to a 51% attack or not? Fast finality is self-explanatory. Liveness, by liveness, I mean that the chain is up and running, that the chain doesn't stop, doesn't halt. We know so many chains that have halted in the past. Solana. Censorship resistance is basically means that there's no one party that can control what goes in and what doesn't. It's actually the decentralized. Decentralization usually goes in hand with censorship resistance. Network effects mean that, for example, if I'm plugged into Ethereum, I'm plugged into the liquidity, massive liquidity of Ethereum, all the network effects that happen around that. And fast and cheap transactions, self-explanatory. I put 6 kinds of chains: permission chains, alternative layer ones, Ethereum, optimistic rollups, CK rollups, and base rollups to pass the test. I may offend someone in the next few minutes. I'm sorry for that. So first one, security. I think that it's very clear that the security test is not passed by permission chains because the validators are put there. There's not even economic security. They are just reputation-based validators. And alternative layer ones, the reason why I remove alternative layer ones because I think we need to take Ethereum as a standard of security, and there's no alternative layer one that is even close to Ethereum. So security already killed 2 of them. Fast finality. I'm sorry, optimistic rollups, but we all know they have this 7-day challenge period. So 7 days is not making the experience any better than we choose. So out. Liveness. CK rollups go out because all the CK rollups as of today rely on a single sequencer. And single sequencer means single point of failure. And if it halts, it's just one hardware. If it stops, everything stops. So the liveness properties are not even close to the liveness properties of a chain like Ethereum, for example. Censorship resistance, still Ethereum and base rollups survive. Network effects, still base rollups and Ethereum survives. Fast and cheap transactions, of course, Ethereum doesn't survive. The only survivor is base rollups. And if I can read your mind, you're probably wondering what the fuck are base rollups. So to finish the presentation, just at the end, I'm gonna quickly explain what base rollups are. The best way that I know to explain it is by explaining the services Ethereum provides to the other layers. So if a chain uses Ethereum for settlement, this is the taxonomy, they automatically become a layer 2. If they use Ethereum for data availability, they are a rollup. Remember, if they use an alternative DA layer like Celestia or Avail, They are called Validium. And if they use Ethereum for sequencing, they are called a base rollup. Sequencing means ordering the transactions into blocks. So base rollups use, instead of having a single sequencer like the CK or optimistic rollups, they use Ethereum for sequencers. So they scale from one sequencer to the 900,000 validators of Ethereum, which makes them super decentralized, leverage the liveness properties of Ethereum, of course, much safer. They are neutral, censorship resistant. They are super simple. This is the case of Taiko. Taiko is simple because it is a type 1, same code as Ethereum. And they are synchronous composable with Ethereum, which means you can tap into the liquidity of Ethereum and Taiko one way or the other seamlessly. You can access directly the liquidity without breaches, which is quite massive. Some people think based rollups comes from Coinbase. It's not the same at all. Coinbase is a single sequencer rollup. Base rollups are, you just learn what they are completely different monster. So to finish, the key takeaways: mass RWA tokenization is not a matter of if, it's a matter of when. Regulatory and technology challenges still need to be addressed, and we truly believe these rollups are the only viable solution to scale RWAs long term. Yeah, thank you guys.